The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the November 25th terrific Tuesday edition of the Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that each of you are off to a great start of your day. If you're traveling out there, be safe and no drinking and driving. Now, let's make sure that you and I, not only do we do everything we can to have a great Tuesday, let's make sure we have a fantastic week out there. Remember, what's talked about, that's always just a dream. What's envisioned is exciting. Of course, what is planned becomes possible. But folks, what is scheduled, that is reality. And the reality is, I appreciate you scheduling some time with me out here. I am grateful for your presence here this morning. I'm here to serve you. That means all you've got to do is give me a call at 877-927-6648. If you do that, you and I, we can go hunting for bulls and bears. The market is off just a bit, so now we got something to talk about. Now we got something to go look at out there. Internationally, you can also reach out at 727-445-1044. Remember, if you've got a question, somebody else has a question, so don't do it for you, don't do it for me, do it for them. A random act of kindness. This is Terrific Tuesday. Of course, it's TFNN. I'm Steve Rhodes. Welcome to the show. The Dow's off 22 points, trading out at 17,795. S&P is off 2 points, trading at 2,067. Composite is flat. It's going to be all about the composite. We'll focus in on that. She's down 60 cents, no big deal. Russell's off 70 cents, no big deal. DAX off of its session highs for sure. She's up 64 points right now. The FTSE is kind of flat out here. Gold is up $3. Silver up 25 cents. The euro. The euro is the one that is making a little bit of a move. Let's first go check out the euro out here. Of course, the movement in the euro to the upside would be a weakness in the U.S. dollar index, would help. And we're going to take a look at the futures contract. Now, this is a 30-minute chart out here, so let's go see what we have going on. So now we've got the A to B equals CD pattern that it is going to try and complete out here. This is a 30-minute chart, right? Now, a 30-minute chart here, and why we're paying attention to the euro is because of its influence, because of the queen's influence on the king. We'll just go ahead and put our A to B equals CD points out here. Now, if you're watching us on Tiger TV, you can see this so clearly in the great HD. The A point down here at about 1,800 hours, the 30-minute chart, 6:30 or so in the evening on November the 23rd. Your B point out here on November 24th. Let me edit my chart out here real quickly and add a couple more decimal points. That would make things a little bit easier. Come on, do there. Get there. Let me switch over here. Where's my decimal points? Oh, I know. I got to move over here. Just got to go to the right spot for it. Decimals, come on, down just a little bit. Sorry about that, folks, but just makes it a little bit easier for me. There we go. Put 5 will be good. Okay, excellent. Okay, so now as we take a look at, there we go. So the B point at 1.2446. Your C point down here, this was this morning here at 8:30, 1.2403. Now makes about a 54% retracement, but you see how prices moved off of that C point? Fairly explosive on a 30-minute chart. Remember, looking at a 30-minute chart out here, we can see the price has basically gotten up to the 1-to-1 level. That 1-to-1 level, 1.2483. The actual interest session high, 1.2481. Very good. Now, muy bueno. Now, what we want to see here is, what this says to me is that we should at least see the euro make it up to 1.2504. I'd have to say 1.2532. And the reason is because we've got this wide-ranging bar. So here's the level of resistance. You can see right now, as we take a look at it. Now, the cool thing is we got a 30-minute chart out here that we can look at, but it doesn't really matter time. It works the same way no matter what chart time frame it is that you're looking at out here. So for watchers on Tiger TV, the time is basically irrelevant. What's relevant are the patterns, such as A to B equals CD. What's relevant are the candlesticks or the wide-ranging bars. What's irrelevant is price. In fact, if you'd really like to learn all this stuff, I did begin a 7-week trading course. It began this past Saturday. That first 3 hours was archived. There's 7 additional weeks of, or 6 additional weeks of updates. So the first one has not gone out. The first one's not until this coming Monday. That will go out. You won't miss anything. There's another 3-hour workshop out there. So if you were sitting on the fence before, let me tell you, it was a great workshop. And if you want to attend, the homepage at TFNN.com, there is a link on it in the carousel. I think it's the second item down. We call it the carousel. It's the thing that's over on the left-hand side, so you can still sign up for it. Make sure that you tell your friends and family that's what you really want for the holidays. That's the gift. You want the gift that's going to keep on giving. Now, in the case here, we can see where resistance is. It's made the 1-to-1. We can see this blue diagonal or horizontal line going across my screen at 1.2468. Once we see the euro get above that, then what we should see is price move up to the top of the resistance level, 1.2537. That's the key number to be watching. It could be just a tad higher. It could be the actual extreme emotion of that candle, which would be out at the euro lower. But he stands ready to do nothing more than just be a PR marketing machine out here. Nonetheless, doesn't matter what he says, what he does out there. His actions do not speak louder than words. It's his words that speak louder than his actions out here. Nonetheless, we have to trade the patterns that are in play. But what I'm telling you is you got to keep an eye on this, because he is a crackpot out there. He's a fun crackpot. We should have him here at TFNN to tell us how is it that he actually does that. How does he say one thing, get the market just moving, and people freaking out and just trashing the euro out there, when basically he's done nothing to increase his balance sheet. I mean, we're talking nada, squat, zero, zilch. I think there's like a commercial out there, isn't that? In any event, that's what's going on inside the euro. We want to pay attention to that. Of course, why do we want to pay attention to that? Because of its influence in the metals marketplace, its influence in the commodity marketplace out there. If we take a look at the S&P right now, it is basically flat. Let's take a look at this. Looks like I've got an email here from Chris. She's asking me, I know that it's a Chris. She's asking me, can I comment on the small range in the S&P 500? So now she didn't give me enough information to tell me what time period, but let's go take a look at the S&P. Let's try to break this apart here. So we look at the S&P 500. Right now, first of all, with regard to the S&P 500, let's take a look at what's really going on. And what's really going on is the S&P 500 is on its way up to 2102. That will complete a 1-to-1 A to B equals CD to the upside. Do I think that's where it's going to stop? No, it's not where I think it's going to stop out there. All right, so let me try to put in play here what I believe is going on, just to give you maybe the overall picture of what I believe is going on inside the S&P 500. We might as well start there. Might as well answer Chris's questions. So let's take a look at this. I'm going to start with longer term picture out here. So the longer term picture, we're going to have to start here. We're going to start with the monthly chart. Now, I'm going to put one of my charts that's included in my expanded edition of the newsletter each day out here. If we take a look at the S&P 500, how do we know where we're going unless we know where we're coming from? So this picture right here, here's the S&P 500 for 16 years. 16 long years it traded in a nice consolidation range. That 800-point consolidation range was broken out of. It was broken out of back in 2013. That was back in April of 2013. That's where we saw the clear break. It actually broke in March of 2013. When you break a consolidation, your measured move is equal to or greater than a consolidation. That says that the S&P 500 wants to make its way to 2350. Now, it's been moving higher. Let me update this chart out here. It's been moving higher, in essence, with less relative weakness. So that pattern is still in play out here. What do we know about it? It's in its fifth wave to the upside inside the Chapman wave out there. It does still have a price relative strength divergent pattern, but that's about to go away. That could continue going away, and I suspect that it will void itself and go away. So you're 2068. Longer term, I'm not going to tell you what's going to happen in the next moment, in the next day, the next 2 days, but I want you to keep this in mind out here. And if we take a look at A to B equals CD patterns, so here's the monthly chart. Let's go do that. Your A point down here, obviously, I'll see if we can grab that. There we go. At the March 2009 lows, your B point up here in May of 2011, your C point down here into October of 2011. What we can see is that prices above the 1 to 1.272 A to B equals CD to the upside. So on an A to B equals CD pattern, and what I taught folks on Saturday, and I gave them the secrets, and about the A to B equals CD tool, if you are just simply doing A to B equals CD and doing 1-to-1, or you're missing out on really the nuances here. You know, what I've done is I've taken the great works of great artists That'd be people like H.M. Gartley, Larry Pesavento, Tom O'Brien, and all, and put other things together, patterns that back then they just didn't see, perhaps because they didn't have the technical tools. And when we take a look at the tools we've got at our fingertips right now, the charting applications, what it is that we can do out there, and have made it better. And that's really what that workshop was all about. This says that the price move inside the S&P 500 wants to head up to 2213 until there's some other piece of information that gets presented to us. That's what it wants to do. So you got 2213 as a 1 to 1.618 A to B equals CD to the upside. And Chris knows this. Chris is one of the early adopters of taking a look back here in the 2012 time frame, as I remember her sending me emails saying, hey, is this really more of an A to B equals CD to the upside than 1 to the downside? And gosh darn it, she was absolutely right out there. No question about it. So, Chris, that's where it's headed to. Then you've got a 1 to 2 A to B equals CD. Takes you to 2482. My suspicion is that is where the S&P wants to head to before perhaps it tops out. That's somewhere between 2350, 2450, 2482 or so out there. But the long-term chart says that is where the S&P 500 wants to go to. Look, if you want to draw a channel line out here like I've done here on the monthly chart, here's your channel line. Price is clearly above that channel line. The top of that channel, that doesn't really mean anything. Is it a breakout of it? No. Is it any resistance? No. It's pretty much might as well just get rid of it, right? Yeah, let's just get rid of it. It doesn't have much in the way of meaning. It's not going to stop price out there. The only thing that's going to stop price would be the bears, and the bears aren't showing up, and I don't know if they're going to show up here during this favorable seasonal cycle out there. So there is the longer-term picture. Let me put this back in its stead out here for the S&P 500. Now, she's absolutely right if she's taking a look at kind of a narrow-banded move here as of late, where you've got a series of doji candles out here between the 12th, the 13th, and the 14th out there, but prices above that. Doji candles and small-bodied moves just tell you that a market is tired out there. That's all. Strongest move, strongest V-shape pattern that we've got inside of the S&P 500. If we go put this back on a weekly chart out here, let's go do that. Let's take a look at a weekly chart. Let's get rid of a few things out here. Let me do this. Just clean this up just a tad for the moment. Let's get to these moving averages out of the way. Let's get that out of the way. Let's get that out of there. There we go. Now we're dealing with a nice, clean chart out here. And let's see how far back can we pull this. But we'll pull back all the way into March of 2009. So when we get back, we'll come take a look at the S&P 500. And what we're going to see is this is either the biggest or the second biggest off of that March 2009 low V-shaped bottom. Something to think about. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 18. S&P is down 1. NASDAQ composites up a couple of points out here. New York Stock Exchange off 4 points out here. Net advancing issues still positive 130. Now, I'm going to go back here to the S&P 500 to Chris. And Chris, thanks for sending the email and writing in. Was it on that page or this page right here? Let me see where I went to. Yeah, it was on this page right here. Let me go back to it. So it's the weekly chart that we're taking a look at for the S&P 500. Now, I just gone through that process with you where I was taking a look at the long-term monthly chart here, taking a look at the consolidation break, take a look at the A to B equals CD pattern that's in place to the upside out there, giving us price projections of 2350, 2450, 2480 out here. And as I just mentioned also, if we take a look at these V-shaped bottoms, very victory bottoms, very strong moves. And this is the S&P that we're looking at here. This is a weekly chart going back to 1994. Now, I'm going to widen this up just a bit. There are 3 extraordinarily strong bottoms that form. But I'm going back, interestingly enough, I just simply went back in my charts. First, let me take a look at where we're at. So let me, come on. Oh, don't be doing this to me now. We can't have my system be dying on me now. Please don't do that. No dying on the vine here. Okay, there we go. Okay, good. All right. So if we take a look at this, let me just open this up, then we'll get back to it here. Okay, so if we take a look at what we have here. Number one, you have this big, strong V-shaped bottom out here. Now, normally price ought to make just 100% move of a move. That means it should have kind of stopped in its tracks around that November 18th standpoint. But instead, price really just simply has motored on through. It hasn't even traded sideways. 100% move of a move should have done that. You know, a nice hammer candle, by the way, down here the week of that October low, and a nice bullish engulfing candle the following week. Strong V-shape. As I pull this back even further out here to find the next strongest V-shaped bottom that would be formed out here. Well, inside this market, the strongest one would be the one coming off of the March 2009 lows. You can see March 2009, the swing point out here was January in 2009, and price did stop right there and move back a bit. We haven't seen that take place in this current one. Now, let's fast reverse back into the 1998 time frame out here. Now, our man Z in the Tiger's Den, he was the one that really brought this to my attention. I haven't actually looked at this here. But we talked about it, I think, last week. And that's if I was looking for the third strongest V-shaped bottom out here, I'd take it back into 1998 just so we look at charts out here. Now, you can also see that what the S&P 500 did was as price got up to its July 1998 area, price moved sideways for about 4 weeks. We don't have that in place right now. Now, what I did do is the interesting thing is I went from the low of 1998, October of 1998, all the way to the high that was put in here in 2000 when I made that top out there, okay? That's that red line. Now, what I'm going to do here is I'm going to pull that red line all the way over to the bottom, okay, of where we are currently at in the market. I got to do a little scrunching here. Of course, as you know, that is a technical term that we're allowed to use here at TFNN. Sometimes you got to scrunch the chart. So I'm going to take that red line and I'm going to move that all the way down to the bottom of that October 16th-ish low that was put in here. Now I'm going to go ahead and I'm going to widen this out. And then we're going to go ahead and make this a little bit stronger. I think what's going to be amazing, what amazed me was, well, what's that price projection? All right, now I can do a little bit more scrunching. Here is where my cursor's at the end of that. 2450. 2450. 2450. Did you hear me? 2450. How does that work out there, folks? So that same kind of bottom that we saw back in 1998, in this case here, I would have to say it's actually even a bit stronger because of just simply the mere fact that price just has not moved sideways or pulled back, which it really should have done after we saw that October 31st move into those highs in that September 19th area. Hasn't done that. This is really a stronger, if you take a look at a weekly basis and you just look at candlesticks and you take a look at patterns as we speak, and trust, folks, this has been this cemented a nice bottom out there. That hammer candle, that bullish engulfing candle that took place the following week. So so I'm going to go on record here and say the top is going to be in that 2450. Now we're going to see that same pattern play out back in that played out back in 1999. Of course, when we get to that price level, I might reserve judgment out here. But now we've got another confirmation of really what is underway inside of these markets out here. So I say thank you to Z, thank you to Chris for even asking me because I ordinarily wouldn't have even done that out there. Now that doesn't mean that we can't see some kind of retracement, but any kind of retracement that we do see really should be bought, in my opinion. When you take a look at the longer-term charts out there, the weekly, the monthly chart out here. Now, where's that buy come in? I'd have to say, really, if we are lucky enough, really, I do mean lucky enough to see the market retrace for the next couple of days, into Friday, maybe Monday, that could be the next buy of the century. And not really a century, but the next buy of this pattern out here. This is Steve Rhodes. This is TFNN. Right.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 14. S&P is flat out here. Now, we took a look at the weekly. We took a look at the monthly for the S&P 500. Let's go ahead and finish this thing off with regard to the daily chart out here, specifically for Peak D in our Tiger's Den. He's gonna go all in long and go on a cruise and come back when the S&P gets to 2450 out there. Now, if we take a look at that hammer candle, so the hammer candle meaning the October 15th low. So the weekly we got a hammer, the daily we got a hammer candle. A very strong sessions. I'd say your stop would need to be below that hammer candle out here, because if the market ever does take that out, then we can say, the analog that we looked at from 1998 probably just got flushed down the toilet out there. But until that time takes place, then say, no, I don't think so. Now, coming off of that low out here, and of course, following this show, we got our man Basil Chapman up next. So, I guess we got two segments to go out here. Maybe he'll give us an update on the Chapman wave counts. As I've got him here, the S&P 500 today making a potential seventh wave to the upside here, and that is a peak G out there instead of peak D like we've got inside our Tiger's Den. Now, I would argue that if we take a look at that fourth wave up here, that little doji candle on that D leg, we had two inside bars out here, two inside bars inside that candle. That says instant restart, a Rooney out here. So it really says you're probably only in the third level on the way up. So a very strong move, but still something that you want to be paying attention to. It actually becomes pretty good and tradable. As far as any retracement that we might see inside the marketplace because of this strong move up off of the bottom out here, it's going to be easier for me to show those retracements utilizing this daily S&P 500 chart. So let me go ahead and do that. And this way, this can actually sit up where the next buy points are, the next logical buy points would be. Let me get rid of a couple of patterns here. Let me just get rid of a few things. Let me turn this off. Just it's always nice to start with a little cleaner palette when I'm doing this. Makes it easier for you to follow along at home as well. So there we go. So now we got something that is clean out here. Get rid of that. That's okay. Get rid of that. There we go. Okay. So now as we take a look at retracement levels, possible retracement levels, we're bound to get one sooner than later, in my opinion. And if we take a look at that October 15th, that could be what's sneaking out the back door, is a little retracement that we get, come Friday-ish, Monday or what have you. But retracements, because of the move up off that low out here, right now as we speak, with the high so far that's been put in at 2,074, only a 0.382 retracement, which would be just huge, okay, if that's all. If we were to get that could be a gift. If that's where price stopped, which would be 1977. Now, at 1977, you're at 2,074. Just to kind of put that in perspective, that's a 100-point move. That's a 100. Is that not a 100-point move out there? 2070? Yeah, 1970. That's a 100-point move. I guarantee you, if we were to get that kind of retracement, there's not a one of you out there. Well, maybe there's one of you that would say, "Hey, whatever Rhodes' monthly and weekly charts were, he's off his rocker. There's no way." Folks, that would only be a 0.382 retracement. That's how strong, this move actually has been. So, is it going to be the 0.382 retracement that you probably take a look at? No. If this is a super strong market, then you probably only get a 2 or 3 wave count to the downside out here, and that would be on a daily chart, and that would probably be taking a look at the S&P futures or something along those lines to be able to really try to tag it. So, the other area of logical area of support could be the top of September 19th, kind of the upper part of its range. So maybe 2020, 2019. But even still, then that's going to be about a 50-point move, and that's going to seem like, the sky is falling. This is just a normal move would take it in 1917 out there. Now, I don't think that is what we are going to see. Not if this 98, analog plays out here. In fact, this could easily be the 98 analog that I'll take you up into 2000. Now, I'm not time-wise using the same thing. But on the other hand, a full year from now, between now and next October, you could see that. You absolutely could see that. So who knows how this will really play out. But we do have these patterns that we just simply can't ignore out there. At least I suggest that you don't ignore those patterns out here. So that's what's going on inside of the S&P 500. That's a pretty thorough look at what is going on. Now, of course, what things could actually get in the way? As I take a look at divergent patterns out here, let me get rid of as I take a look at the real moves inside the market. One great tool out here, and this is back to the S&P 500, just kind of been hanging out in this territory here today, is the Guggenheim S&P 500 equal weighted ETF out there. And maybe there's another equal weighted ETF. This one's just an easy one. It's been around for a long time. And what you look for is divergences. The upper portion of my screen, by the way, that's the equal weighted structure. And you can see here that it's been continuing to move higher. That what that means is, from an equal weighting standpoint, if this continues to make higher highs as the non-equal weighted ETF, which is the S&P 500, okay, the SPY, a non-equal weighted ETF, when the two of them are in agreement, tells you that the weight is equally being handled. This is probably a lousy way to say it. It just says that the weight is equally distributed. There we go. That sounds even better out here. It's divergences that you really look for. And because those divergences, when the equal weight is saying, hey, not so fast, those have led to some kind of a retracement, sometimes a deeper retracement out here. That pattern is not in play as we speak. So as the market's moved higher, one could say, hey, light volume, whatever, go take a look at what's really going on in the underlings and what they're doing. There's also another way to take a look. It's really the Qs that have been moving us out here. The Qs here, they too have been moving higher. So they too have been moving higher in the equal weighted. The equal weighted there is the First Trust, QQEW out here. So QQEW versus the Qs, they're both in line with each other. The only real significant chart I think to pay attention to is this New York Stock Exchange. This is where we've got the composite. The 3,000 issues in the upper portion, the NYSE, the top 100 big cap funds, large cap funds. large cap stocks that are part of the New York Stock Exchange. That's up against it's reared its head up against resistance, the top of its rising price trend line out there. In the past, that has mattered. We've seen some kind of a pullback out there. That probably gives you the biggest hope in the marketplace of some kind of a pullback out here. And then at the bottom, you've got the international, the top 100 large caps in the NYSE that are made up of the international companies. They're just sucking wind all together out there. That's are there some divergent charts out here? The biggest one, as I've pointed out in the past, has really been this one, although this is now starting to tick up. So, and this, when I talk about this one, I'm really referring to the High Income Opportunity Fund out there, the Western Asset High Income Opportunity Fund. This thing has been making lower lows. It's been in a descending trend while prices have been moving higher. And typically, this tells you about liquidity. And this says, hey, liquidity, not so much. But I will tell you over the course of the last couple of days, November 20th through today out here, what we have seen is this has started to tick up. So, these things can be worked off. These are divergences to pay attention to, not necessarily divergences to go out there and short in the marketplace. Even, if you take a look at the GE and the Dow out here, there is no real, I guess right here there's a small one. Looks like a GE over the course of the last few days, from November 18th through now, has kind of made a double top out there, very close to it. Whereas inside the Dow, it's actually made a higher high. Okay, so we've got one small little divergence out here that is worth noting for sure, because in the past this has mattered. So let's go from about right here to here. We can see the Dow making higher highs, but with regard to GE, it's been just simply kind of more of a double topish type pattern out here. So, okay. So finally, you've got something that is worth noting and paying attention to, and we'll continue to pay attention to that for the next couple of days. Well, as long as the divergence here lasts out there. So, okay. So that's the first one. Inside, but like I say, inside the equal weighted structures, no big deal out there. And inside the Euro Japanese yen, no big deal out there as well. Okay, so that should cover it all. Now, it doesn't really cover it all. Let's come back here, as long as we're kind of in the NASDAQ territory. Let's come back to the NASDAQ composite. A NASDAQ composite out here, this is also in the Dow. Okay, so this is kind of interesting. So this is kind of cool as we're taking a look at it. If you're following us on Tiger TV. So we just pointed out, now this does not change my longer-term view of where the S&P 500 is going, okay? You got to remember, we're also shifting time frames here. So we're taking a look at the weekly and the monthly. They've got a clear message, in my opinion. Now we're at the daily, and yeah, there's going to be some retracements. There's going to be some give back. We just took a look at what just a normal retracement would be in the S&P 500. It would freak people out. They would say, no way, it's all over, right? Okay, so now we're kind of winding back down to the daily, trying to poke around under the covers to identify some patterns out here. So if we take a look at the Dow Daily, not really doing too much, but what the Dow Daily is doing, if we take a look at its price oscillator, you can see it's been turned down. It's been turned down in a pretty good way compared to what price has actually been doing inside of the Dow ever since that top, or not that top, but ever since that October 31st move upward. Doesn't really, let me get rid of the retracement out here because that is not accurate. Okay, so now we can see the pattern that is in play. Let me go ahead and expand this thing down and also move the angle. So there's your descending tops. Now, if the Dow gets below, if that oscillator gets below zero, you're only at 0.87 as we speak right now, any kind of movement, 40, 50 points today to the downside could get this thing below zero. What happens when you get below zero? Well, what it does is, number one, it tells you that the sellers now have control. What they can do with it, we don't know. But it says they've got control in the marketplace. Sometimes this leads to pretty decent retracements out there. That's really what its message would be if it can get below that level. It is not below that level right now. It is something worth noting. If we take a look at the composite, what you'd really want to see from a retracement standpoint, from a tradable standpoint, inside the market, is you would really want to see the composite also turn to the downside. Now, we've seen that happen since the October 15th lows out here. We've seen that happen for 2 days, but each of those days was just simply blown apart by the buyers coming back in. The oscillator now moving just a little bit, so it's still also making lower lows out here. So we still have a descending price oscillator that can resolve itself very easily, but we want to watch that. So right now that's above the zero line, because when it drops below zero, it says the sellers would be in control. So the third one is going to be the New York Stock Exchange. That's really how we take a look at the summation index out here. It too is above zero, but if all three were to get below the zero line out there, then you actually would have some potential tradable, maybe for a few days or so to the downside in the market. But what that would really set up for most of you from a longer-term standpoint, it was be saying, okay, I'm going to get a gift from the bears, from the sellers out there, and you're going to get a gift of the market moving higher. You want to be able to buy that bottom out there. So that's what's going on as we take a look at the summation indexes. Let me take a look at the VIX, see what it has done. Did it take out the low of a few trading sessions ago? Let's see here. That low being the price point of 12.38. What did it get down to this morning? 12. Did it get down to it? 12.42. No, it still hasn't taken it out. Pretty well that it still hasn't been able to take it out. Is there any meaning behind it as we speak right now? Not one of any significance that I am going to worry about. Okay, so there's your overview of the markets, the S&P 500. Now let's go check in and see about some of these price movements in some of these stocks out here. Cracker Barrel. Let's go take a look at Cracker Barrel. There's going to be plenty of people on the road this week, and there's going to be folks stopping in at Cracker Barrel. What's your favorite thing at Cracker Barrel? I'd have to say for me, it's probably one of those root beer. They got all that old candy out there, so it just kind of reminds you when you were a kid. And I always liked those root beer flavored sticks. I don't know, you can call them cinnamon, but I guess we used to call them cinnamon sticks. And then they went to all those other flavors out there. Do you remember as a kid? I don't know. Did you ever do this? Did you? Probably didn't. I remember as a kid going around, young kid we're talking about, did this with my cousin, going around finding those bottles that we could get a nickel for, all those bottles that we get a nickel for, and then take those to, and then ride our bikes up to the candy store, turn those bikes in, and you could get quite a bit of candy there for a nickel back in those days out there. You could even get a grape knee-high soda out there, or those Cokes in those nice, big, long, thin bottles, that green glass out there. Yummy. Well, let's take a look at Cracker Barrel. You didn't really come to reminisce here. What the heck is Cracker Barrel doing? Man, looks pretty good to me. And I do like, the only thing I really like at Cracker Barrel, so to speak, is their ham, their country ham out there. Nice and salty. All right, let's see where Cracker Barrel is headed to. Let's see if we can do some kind of price projections out here. If we take a look at from the high of November in 2013, November 2013, down to a hammer candle that was put in down at its lows back in May of 2014. Right now it's trading, it gapped up into the 1.272 expansion of that set of swing points out here. That price is 125.64. You're trading at 125.96 as we speak. Let me see what kind of volume we've got behind the move here today. Inside of Cracker Barrel, you've got 190,000 shares have traded hands so far. Yesterday had some pretty good volume, and it had 452,000 shares. Cracker Barrel, if it can hold on to these gains, I don't see any reason why it shouldn't at this stage of the game. Looks like it wants to make a price move up to about the 134.57 out there. Grape soda. Can you even find a grape soda? I call it, of course, I grew up in Michigan. We used to call it pop. How many of you call it pop? Of course, if you grew up in Wisconsin, you would say, hey, to the teacher, can I go to the bubbler? Do you know what the bubbler is, folks? This is Steve Rhodes. This is TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 17. S&P is off a couple of points. Composite still red. I'm sorry, it says still green out here. The Russell is off about $1.70, so not a big deal. As a back to the bubbler out there, for those of you that don't know, when I was a senior in high school, my father was transferred. He used to work for Victor Comptometer. For any of you that might remember those little calculators, big calculator company. And he had turned down so many promotions. It was finally, you turn this one down, sayonara kind of a thing. So my senior year of high school, right around this time of the year, we had moved to Milwaukee, a suburb of Milwaukee, and ended up going. I kind of came up in a lower middle class, tough area. Detroit, tough kind of area, and moved to, which was absolutely Hollywood. I mean, talk about a divergence in literally the kids' parking lots had extraordinary cars. Kids were being dropped off in limousines to go to school out there. I certainly was not used to that. I remember the first day in class asking for some directions, and somebody said, just go down to the bubbler and turn right. Okay, that's what was said to me. Go down to the bubbler and turn right. You really think I knew what the heck that was out there? So bubbler is a water fountain. And for those of you that don't know, of course, I would say, I had in Detroit, the Faygo was one of the soda companies. Of course, and they had Faygo Red Pop. And I don't know if that's really where, in Michigan, if you're from Michigan, you call it pop. I don't know if there's any place else that calls a flavored soda pop out there, and I don't know if it really came from Red Pop, but Faygo Red Pop was pretty good drinking back then as a young lad. Anyways. Enough of that. So where am I really gonna leave you here today? I think it's really it's the summation indexes. We'll pay attention to that. The VIX index, there's no way it's going to get above the 50-day exponential moving average. So that's not going to give you any kind of a signal out here. Really nothing else to watch. The Euro Japanese yen, we go take a look at what it's doing. It's really just consolidating sideways, having broken a major trend out here. That is very long-term bullish. If we put this on the monthly chart, just because this is the carry trade out there, we took a look at the S&P 500. We took a look at where price was moving to over the long haul, that 2450. We looked at the 1998. Another thing that if you take a look at the euro yen back to 1979, this little green trend line, which it broke through out here, and it did that this month. It did it certainly last a couple days ago or last week, whenever it's broken through a significant trend line. And if the euro Japanese yen continues to move higher, well, it'll make 100% move, get up to the 169 level. You're 145 and change, or 147 and change right now. That'll put some energy. It's a directional correlation. It's not a tick for tick or anything. But those are the kinds of things that you want to see those are the kinds of things that we will see and that will in order to fuel this market higher. So the mere fact that it's broken a extremely long-term trend line out there is extremely bullish in the market. And as long as the NYSE stays above its 2007 highs as well, it's nothing but bullish outcomes. We just got to find the spots to go ahead and take your trade to the upside out here. So moving to the downside, you got Netflix, but we know that's pulling back into a high volume low out there. You've got the Casey's General Store. Casey's General Store out here. That's down $7, down 18% out here. Never heard of Casey's General Store, but since I was reminiscing about old-style candy and pops out there, it would seem like Casey's General Store would pop up on my screen. So, folks, stay tuned. Let's go climb Mount Everest. Looks like that's what the S&P 500 is doing. We'll go see if it's really a peak G or has that recycled. Folks, have a great Tuesday. Look forward to seeing you bright and early tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.